Best wishes and Happy New Year. Can you all hear me? Can you all give me a thumbs up that you can hear me? Little
We
bit of
can hear
a
you.
maybe host. Yeah, awesome, everyone. Hello, hello. Yes, yes, yes. Oh, loads of yeses. Great. Hands up. Awesome. Thank you so much. So, best wishes to all of you. I wish everyone a very, very wonderful new year filled with health, happiness, lots of success, and hopefully lots of prosperity as well. As you all know, my name's Kareem, and I'm from Expat Republic, and we run a media company, and we do all kinds of events and webinars for international expats from all around the globe who have chosen the Netherlands as their home. And so, yes, one of the things that comes to mind is people, they maybe look to invest, and which brings back to my prosperity point about the buy to let webinar. Today we'll be discussing buy to let, how you go about it. Maybe you've already bought a first home and then you're like, what do I do next? How do I invest? Or maybe you're thinking, look, I don't even live in the Netherlands and I want to buy something in the Netherlands. Or maybe you actually just really love the rental you're in and you're looking to buy something. Whatever it is, we're here to talk about buy to let. We have really two incredible speakers, Robin and Egle from Mr. Mortgage. Mr. Mortgage is a really, really great mortgage firm based in Amsterdam, although they do serve the entire Netherlands. Very friendly, very, very approachable, insane amounts of knowledge, insane amounts of experience, really wonderful to work with. And they taken their lunch break to talk to you and give you some more information about buy to let in the Netherlands. So please, wonderful speakers, I hand it over to you. And thank you all for taking time out of your lunch to be here. If you have questions, you can put it in the Q&A or in the chat. I'm going to just answer the first question. Yes, it will be recorded, and yes, you will receive the recording.
Thank you, Kareem, as always. Thanks for hosting and for the very kind words and the wonderful introduction. And thank you everybody that's attending right now. I'm looking forward to sharing all the knowledge we have here with you. It's a presentation basically to get you kind of familiarized with how everything works and what you have to know when it comes to buying a property in the Netherlands to invest in. Now, as Karim already mentioned, if you have any questions during the presentation, by all means, feel free to use the Q&A, and then my lovely colleague Egle will then later on pick out the best questions. So make sure you have a very, very good question, and then after the presentation, we'll discuss any of the questions you might have. So without further ado, let me just share you with the presentation that we have today. And then we can get started. And there we are. You should be able to see my screen in a bit. And obviously, as you undoubtedly well know, we're going to discuss buy-to-lets. Now, first off, basically what it is, how to invest in or rent out your property. Buy-to-let, keep-to-let, just to get it out of the way. Basically, it's all the same thing as an investment mortgage, but we'll dive into that. Now, let's get started. First off, let me introduce our wonderful team at Mr. Mortgage. From left to right, you can see Cesar Riomas, the founder of Mr. Mortgage, and my fellow financial specialist. And myself, I won't challenge you to pronounce my last name. My name is Robin Uijtdehaage, very Dutch name in that sense. Then my colleague Egle Kemezyte, our growth marketer, letting us get to know you, obviously, and getting us out there. And then the other financial specialist, Özkan Karakol, kind of our mortgage Google, if you will. Now, very excited to help you all. Let me explain a bit about what we do as Mr. Mortgage. We're a mortgage specialist or financial specialist. We focus on mortgages primarily, and basically what we are is a mortgage brokerage firm for expats and internationals. That is where our focus is and what our expertise is. The same goes for entrepreneurs. If you're self-employed, all the tricky situations that you might not necessarily find the best way in, we know everything about it and very happy to help you out there. We know everything about the legal and regulatory conditions of different banks, of what the government requires you to do, the tax authorities, obviously. And we work with over 30 mortgage lenders. mortgage providers. Now, we're independent from anybody and everybody. We have a network of real estate agents, tax advisors, notaries, appraisers, anybody that you need in this whole process to get everything, to make this process as smooth as possible, to share all the information that you need in this whole process. Now, again, we're independent from anybody and everybody, basically because we want to be able to give you the best advice possible without having to meet quota and such. Now, we have a special position with a couple of lenders as well, because we're experts in the expat mortgage business, and that allows us to get somewhat better interest rates, somewhat better conditions with a couple of banks that usually are more hesitant to that. So that definitely can work out for you. Now, as mentioned, 30 plus lenders. Interest rates are a very important thing, of course, and they can vary per week even. Now, we always get notifications before the change of interest rates will happen. So when you bought a property, we can always time the mortgage application as well, so we can guarantee you with the best interest rate that is available to you at that time when you buy the property and secure the mortgage. Now, when we consider what kind of mortgages we focus on, it's residential mortgages. So when you buy a property and finance it through a mortgage for a property that you're going to live in yourself. Also buy-to-let mortgages or investment mortgages, same thing. Basically, you're buying a property to rent it out, but also refinance and increase, for instance. So if you have a property that you live in currently, but you want to move to a new house and want to rent out your current house, it has to be refinanced to an investment mortgage. Or maybe when the interest rates will decrease, let's fingers crossed, and it will decrease even more because we're already in a decreasing scale right now. When it decreases even more and you want to benefit from that lower interest rate, you have to refinance as well. This is also something we can help you with. Or if you want to increase, if you want to, for instance, renovate your property. Now, basically what we do is we set up a tailor-made solution, also when it comes to divorce, or the other way around, if you want to have your new partner join on your mortgage, or if you want to buy a holiday home, for instance. Now, all of this, we always want to make a tailor-fit solution for you personally. Don't go for the most obvious option, but let's check all the scenarios that are possible and then pick the best one. That's basically what we do. Now, before we start, it's good to know what you can expect today. So I'll start with an introduction to buy-to-let mortgages. We'll discuss the reasons to invest, unique financial benefits that you have when buying property here in the Netherlands, eligibility criteria. So what kind of criteria do you have to meet to be able to do this? A quick overview of the process and timeline, the rates and the fees that you can expect, and of course, the Q&A at the end of this whole presentation. Right. This is really where we get to the nitty-gritty, so to speak. A buy-to-let mortgage is not a residential mortgage. It seems very obvious, but it is good to keep in mind. Now, what is buy-to-let? A buy-to-let or investment mortgage, again, same thing, is a type of mortgage that is specifically designed to finance property to rent out to tenants. It is good to know, also good to know that when you have a property that you finance through a buy-to-let mortgage, you're not expected to live in the property. When you live in a property and want to rent out one room, for instance, you don't need an investment mortgage when it's just one room. As long as you are the primary resident of the property, you can have somebody live in your house as well as kind of a roommate. Now, do consider that there's different rules and regulations there when it comes to the bank, the tax authorities and such, and I'll explain everything about that when that's a specific situation. Just schedule a call with us and I'll explain everything about that specifically. So buy-to-let is when you buy a property and rent it out completely. Now, there's some differences between residential and buy-to-let. Let's start with the loan-to-value. So how much mortgage do you take out based on the value of the property? With the residential mortgage in the Netherlands, you can finance a full 100% of the value of the property. So let's say you buy a house for 500,000 euros. Then the value comes back as 500,000 euros. So therefore, if your income is sufficient, you can secure a mortgage for 500,000 euros as well. Now, with the buy-to-let, that's a bit different. There, the banks want to have a bit more security. So then they'll say, okay, we'll also finance up to around 70% of the property value. This depends on the specific bank and the specific situation there, but 70% is approximately what the situation is there. Now, a hot topic is also the transfer tax. Now, when you buy a property for your own use, so as a residential property, the transfer tax is 2% of the purchase price. So again, you buy a house for 500,000 euros. So this means that the transfer tax is 10,000 euros. Now, the transfer tax for an investment property, or basically when you buy a house and you're not moving in there yourself within the next 6 months, then you have to pay the transfer tax of 10.4%. So it's good to keep in mind when you manage your budget for this whole process. Do consider that that's a cost that you have to keep in mind. Now, when it comes to interest rates, again, it's a hot topic, always has been and always probably will be. With the residential mortgage, you have the regular interest rates for residential mortgages, obviously. Now, with an investment mortgage, it's a bit higher usually. Let's say it's about 0.7 to 1.2% higher, again, depending on the bank and how long you fix your interest rate for too. Now, the eligibility, that's a big difference there also. When you buy a house for a residential mortgage, then you, as the person that loans this money from the bank, as the client, let's say, you are the primary focus point. What is your income? What is your finances? What do your finances look like? How durable is your income? What kind of contract do you have? All of that. Then also the value of the property is also important, but you as a person and your financial situation are the most important. When you look at an investment mortgage, it's basically the other way around, because it's an investment, and the property that you buy, that house that you want to invest in, that is the primary focus point of an investment mortgage. So what is the value of the property in rented state? What is the expected rental income? What is the point system? So can you rent it out in commercial housing or in social housing? All of these things will be checked, and that's the focus point of the mortgage for an investment mortgage. Now, true, your income, etc., will also be considered. I'll tell you a bit more about that specifically in a slide that's coming up. So that's the difference between residential and an investment mortgage. So that's a residential and investment. Now, within investment mortgages, you have basically two ways to get to somewhere: keep to let or buy to let. Again, the end product is an investment mortgage, but these are two different ways to get to there. A buy-to-let is when you buy a property from the market and then you rent it out. So you never lived in the house yourself, you buy it and you rent it out directly. A keep-to-let, that's the other option, and that's when you currently have your own home. And then you think, okay, sure, let me move to another house, but I want to keep my property and then rent it out. So you keep it to let it out. So that's why it's keep to let. So that's the difference there. One, you buy it from the market, rent it out right away. The other one is when you already own the house and then rent it out when you move to a new property. So this is an important topic, of course, and any of the topics are important, of course, but a very important topic is the reason to invest. So why would you do this? Now, that's very personal, of course. It very much depends on your view on your finances, how your finances look and what you want to do with them. So maybe you want to focus on rental income because you know that the rental prices, they gradually increase every year so far. So maybe you want to jump on that boat. Capital appreciation, so maybe the value will increase over time, right? Portfolio diversification is also a very fair point when you already are investing in maybe stock or Bitcoin, whatever you want to invest in. Then real estate can be kind of an option to balance your portfolio as well. Or the leverage. So when it comes to the loan that you take out and the capital that you input and you want to leverage that, inflation hedge to kind of counter that inflation that is going on. But also retirement income, having a tangible asset is also important for some people, that they like that there's something that you can actually see and touch. Property development, any of it. Now, you don't have to choose one, of course. It's a very fair point that it might be a combination of all of these things. And these are just a couple of examples that can be the focus point. Now, it is important to, before you dive into this, that you don't just buy investment property just because it's a hype or something, or that you heard about it, but be aware, make sure that you have a sound financial plan to know why you do things and how you want to do this, how you want to make sure that this happens. Now, obviously, this is also something that we're here for. We'll not only make sure that everything can happen, but we'll also be your sparring partner to find the best option. To see what your situation is and to kind of challenge you every now and again as well when you have a set view in your mind, but we'll show you different scenarios. So, well, hey, have you already looked at it from this side? And then we can find the best solution instead of the most obvious one. So, there are some unique financial benefits when you buy a property. For instance, the taxes might sound a bit weird, but especially when you are buying as an expat or international, and you might benefit from the 30% ruling, for instance. Now, one of the things is the income tax. So usually, when you have an income in the Netherlands, you pay taxes over it, income tax. Now, when you you don't pay tax over the income, over the rental income that you have. So when you have a property, that is, you don't live in that, so it's just a house completely separate, and you rent out the entire house, the income that you get over that, so the rental income, is not taxed as income tax, which is very nice, of course. Now, the capital tax, that is something else that you have to consider, of course, but as long as you have the 30% facility, you don't pay capital tax, also known as box 3 tax, for the ones of you that have already checked out the tax system in the Netherlands. Now, do you not have the 30% ruling, or don't you have it anymore? Then we will calculate to in what way the capital tax impacts your investment strategy and how that affects you now and to the future as well. Now, one other thing is there's not necessarily a unique benefit, but it's something to consider as one of the taxes is the annual property tax. For instance, in Amsterdam in this year, the capital tax is 0.0462% of the WZ value. For you that don't know, the WZ value, or the WAS value, is also known as, it's the value that the municipality gives the property. Nobody will visit your house to double check, but they won't check what kind of kitchen you have or what kind of nice wooden floor you have. Basically, it's the average selling price of your house in the year before last. So soon, the new WZ values will be published, and that will be the average selling price in 2022 in your area. So it's just an indication there, and for the municipality to base their taxes on, for instance, this annual property tax. So just good to know. Now, it's a lot of information that we're sharing right now, and I'm fully aware. Now, as Karim already mentioned, this presentation is recorded, so you can always check it later on. But also feel free to schedule a call if you have any additional questions. And if anything, throughout the whole process, we'll guide you through that. So we'll always keep you updated on what the situation is, and we'll explain any of the topics that we just discussed later on as well. So, the fees. When you buy a property, there are some investment that you have to do. There's a difference when you buy an existing home or when you buy a new build home. With a new build, you see VON, and that means vrij op naam in Dutch. Basically, freely translated, or directly translated more rather, it's free on your name. So basically, it means it will be put on your name, but without the additional cost of transfer tax, for instance. When you see existing home, it says KK, kost te koper, so the cost will be for the buyer of the property. What this means, for instance, first off, the property transfer tax. I mentioned before, so this is the same example, really. So when you buy a property of 500,000 euros, when you buy an existing home, the transfer tax is 10.4%. So therefore, 52,000 euros is the transfer tax that you have to consider. When you buy a new build property, so that's a project that you get into, the property has never been owned by anybody. So therefore, there's no transfer of ownership. And that's what transfer tax is. It's about the transfer of ownership from one person to the other. If you buy a new house, it's never been owned by somebody else, so therefore, no transfer tax. The real estate agent, now when you buy an existing home, usually people work with the real estate agents as well. It's usually a bit over 1%, so let's say 1.2%. So in this case, that's approximately 6,000 euros. The notary, For an existing home, you go to the notary for both the mortgage deed and the transfer deed. Now, when you have a new built home, again, you don't have a transfer, so it's just the mortgage deed. Valuation report is the same for both approximately. Bank guarantee is to cover a 10% security deposit, which is part of the purchase process. Again, for new build, that doesn't apply. And the fee that we charge is exactly the same for both situations. I'll explain later how our fee is structured and how it works. So basically, one other thing is to keep in mind when you buy a property to invest in, you expect rental income, right? Now, when you buy an existing home, that rental income can start right away because somebody can rent that property right away as well, of course. Now, when you buy a property that has to be built still, well, then as long as it's a building site, it's very hard to find somebody that wants to rent that spot and just pitch their tent there, so that it doesn't happen. So you usually have to wait a bit until the building is delivered. Let's say about 24 months. It's usually between 1 and 2 years that the property is fully done. So then you can expect rental income. The mortgage interest without tenants, therefore, over that 2 years is expected for a property of 500,000 euros at around 18, 19, let's say about 20,000 euros. So all of this combined, when you buy an existing home, it's about 46,000 euros, and when you buy a new built home, it's about 24,000 euros. So then you can see, okay, sure, what's my strategy? Are you okay with waiting a bit more until you can find the result of your investment with a new build, for instance, or do you rather start with the return on your investment directly with an existing home? It's not, the one is not better than the other one necessarily, but just have to see what fits your financial goals. Now, when you see the rates, there's a lot of talk about interest rates never being this high, and a lot of extraordinary stories. Now, this is an overview from 2004 till now, so that's roughly about 20 years. And we see that the interest rates are actually decreasing. This is based on the 10 years bond, but that's what most of the interest rates are based on. So we see a decreasing line, especially in 2018 until 2022, start of 2022, we saw a decreasing interest rate, and the rates were at some point around 1.5–2%. Now we can see an interest rates somewhere for investment mortgage somewhere between, let's say, 3.5% and 6%. It's a big gap, I know, but it depends on how much saving you use and how long you want to fix your interest rate for. But those rates, we see a decreasing trend happening already, and they're far more healthy or more logical when you look at the financial markets. It didn't really make sense when interest rates were 1.5% or 2%. It makes significantly more sense when the interest rates are between the 3.5% and 5%, because that's a more healthy financial market in that sense. Now, there's about 8 lenders to choose from. When you look at the lenders that offer investment mortgages, actually 9 now, because there's a new lender or an existing lender that also chose to start investment mortgages. And that's kind of what we see happening in the market now as well. So we can see kind of the housing market or the mortgage market evolving, where more banks are considering investment mortgages because they know it's a thing in the market. And that's actually a good thing, because then if there's more lenders, there's more competition. So that's a good thing when it comes to the interest rates and also the conditions that you have when it comes to how much you can borrow. Is it 70, is it 80%, for instance? Now, all of that we'll check for you in your calculations. Of course, we'll always know what the best option is for you. Now, eligibility criteria. So what do you have to provide to be able to secure a mortgage for investment? Now, I mentioned already the primary focus point is on the house, on the investment object. But where we start the list with here is your income and the housing cost that you currently have. So your current income is also taken in consideration, not as the first most important thing, but it's definitely considered as well, and your housing costs as well. Because the bank, the investment mortgage bank, does want to know that even if you have this investment mortgage and you make money from it, can you still provide for your own housing costs as well? How much of your liquid savings do you have? Not only to use for the purchase and financing of the property, but also for yourself. So can you cover Can you withstand when the property is empty? Can you withstand the vacancy of your property for the time being? So when you're transferring from one tenant to the other. Now, it depends on where you buy the property to rent out, of course, but how long that period of time would be. But it's important to have some liquid savings for that. And not to forget, you'll be a real estate investor. So you are also responsible for the quality of the property and the upkeep of the property. So if, for instance, the boiler or the heating system breaks in the property, you are the one to have to fix that or have it fixed at least. Now, the loan-to-value ratio, as mentioned before, how much mortgage can you get based on the value of the property? The property in rented state, mind you, that's usually a bit lower than when you have it on open market and you can send it to anybody. But when it's rented out, how much mortgage can you get, and how much savings do you have to cover the difference, of course. Now, what's the expected rental income? There's also a difference if you already have a rental contract. For instance, if you have a keep to let, so when you own the house, you're renting it out and then want to change the mortgage to an investment mortgage, or will it be the expected rental income based on the valuation report? And then, of course, the cost of the buy-to-let mortgage itself as well. So this all has to make sense, has to tick all the boxes at the lender, and then you're good to go. Now, the process and timeline. I mentioned that that there's a short overview there as well. This is very basic. This is kind of a best case scenario. It can go quicker if you're lucky, and sometimes it takes a bit more time for you to find a property, of course. But let's say you start this month, January 2024. First off, check your mortgage eligibility. That's the first thing that we do, is a financial analysis, where we take a deep dive in your financial situation and check, okay, sure, what are the possibilities within your situation, within your goal, and then based on that, we can determine a strategy. So how much savings do you want to use? What is your preferred payment or your preferred yield per year, per month? All of that. Then when you've done that, you can contact a real estate agent and later on also appraiser. And you contact a real estate agent to potentially help you find a property, but definitely when you found a property, to get an understanding of what the expected value of a property is. Understand what the expected rental income will be for this property. That's where a real estate agent and appraiser can help you out with, so you know before you actually put in an offer what the result of that investment would be. And then we will, when the offer is accepted, happy days, of course, we'll collect some documents with you, and then we'll start a mortgage application. Doesn't have to take long. I know that when you check with banks, they will usually say, well, somewhere between investment mortgages, maybe even between 4 and 8 weeks. I wanted to say I don't necessarily know what they do in the meantime. I've worked at the bank. I do know it's a lot of paperwork and very unnecessary. And we smoothen out that process, and we have direct lines with the lenders. So we have been able to decrease that processing time. So we need about 2, maybe 3 weeks to secure everything, including the assessment at the bank. Now, before we do all this, we want you to be able to know more about your options when it comes to the mortgage. So before you're bidding on a property, so when you put in an offer, before that, let us know for sure. We'll guide you through that whole house hunting process. So before you make any final decision, we'll set up the calculations with you, with the information from your real estate agent. So before you put in the offer, you already know, okay, this is what my mortgage would look like, so you can make a valid decision based on the correct information. Now, all of that is done. Then, again, about 2-3 weeks later, your mortgage is approved. Happy days. You can start looking for a tenant to move into the property, and then you have a notary appointment to finalize the purchase. Basically, that means that you sign the transfer deed, so you're the new owner, and you sign the mortgage deed to confirm that you have a mortgage on the property. Then you check if the property is all good, if there's no faults to the property that you weren't made aware of, and then you can have the tenant move in, and that's basically it. Then do consider that there's a maintenance of the property, of course, but that's for a later date. Basically, when it comes to the financing, that's all there is. Check your finances. Step 1, determine your strategy, look for the property, get your mortgage sorted, find a tenant. Happy days. Now, your return on investment, that's basically what everything surrounds on. Now, these are two examples. With a purchase price of 315, the expected rental income is about 1,386 in this particular example. And then you can see the required funds. So the input of your personal savings that was required is then approximately 100,000 euros. That's everything combined. Then your return on your investment is about 4.27%. In another example, the purchase price 600,000 euros, expected rental income at 2,500 euros. Then you can see that the return is about 3.38. Now, these are examples. They don't necessarily depict every situation for everybody who buys property for 600,000 euros, because the expected rental income can make a difference there as well, of course. But just to give you an idea of what that would mean. Now, a rental return on investment obviously depends on the specific situation. How much savings do you input? What is the interest rate that you pay to the bank? What is the purchase price, rental income? All of that makes a difference there. Also, what is the amount of mortgage that you take out? Because that in turn can have somewhat of an impact on the potential asset tax that you have to pay, the property tax. All of that is something that will obviously, situation per situation, for every scenario, will show you what that impact would be. Then the pricing. When it comes to this is the pricing for Mr. Mortgage. When you buy a property from the market and you rent it out right away, our fixed fee is 3,199 euros. Keep to that when you already own the property and want to revise the mortgage or refinance the mortgage into an investment mortgage, then our fixed fee is 2,899 euros. Now, to give you a kind of an outline of how our service works, we always start with an introductory call. It's a call of about 10, 15, 20 minutes to get an understanding of what your situation is, to explain a bit more detail what our service is like, what the next process and what the next steps would be, to give you a clear idea. Answer any of your basic questions, all of that. That call is always free of any obligation or any cost. So whenever you have questions, feel free to schedule a call with us, and we'll just explain anything that you need to know in the basic term. Now, then the next step is the financial analysis, and that's where we really take a deep dive into your financial possibilities and situation based on the goals that you have. Now, for that, we charge a small down payment of 299 euros, a one-time thing, regardless of how long it takes or how many calculations we do. It's just a one-time down payment to cover the hours that we put in, and only at the very end, when you actually have the keys in your hand, we've guided you through the whole process. We took care of your mortgage, supplied you with translations of any documents that you have to sign for the bank, all of it. Only then the remaining fee is charged. So yeah, thank you. This is the presentation. If you want to schedule an appointment, feel free to use the QR code in the right bottom of the screen. If you have any questions, by all means, show them in the Q&A. And then I'm very curious what kind of questions I can ask. Feel free to ask any question. When it comes to very personal questions that have to be based on calculations, for instance, then I suggest we schedule a call. But yeah, that was it. Thank you so much. And let's see what kind of questions you have for me.
So hello all. So I'm going to start with a question about Keep-to-Let. Can you change your mortgage from residential mortgage to a buy-to-let mortgage? How easy is to do that? And can you do it after 1 year of living, I guess, in a property? And what are the fees?
Yeah, sure. So first off, yes, you can change your residential mortgage into a buy-to-let mortgage or investment mortgage, and that's what's considered keep-to-let. So when you already own the house, you already have a residential mortgage, and you want to change it into an investment mortgage so you can rent out the house, that's when you have the keep-to-let process. So yes, you can change it to an investment mortgage. How easy is that? It can be very easy. It can be done in about 2 weeks, no problem. It very much depends on what your situation is, of course. If you might have to input a bit more of your savings to get down to that 70% loan to value that you can get for an investment mortgage, again, basic situation. So if your income is sufficient, if the expected rental income is sufficient, and you have the savings, if necessary, to repay a bit of your mortgage to get to that lower amount, no worries. That can be quite easy. What the fees are? Well, the fee for Mr. Mortgage, as mentioned just now, is €2,899 to do the refinancing. You have appraisal, a valuation report that has to be done, let's say about €1,000, and you have to go to the notary. So everything added up, let's say around €5,000 in fees that you have to consider. Now, and then it depends on your current mortgage if there has to be a change there. So if you break your mortgage contract, you might have to pay a penalty. It doesn't always apply, but if that applies, that comes on top of there as well. But we'll calculate that, what that means for you specifically. But that depends on if you have a remaining mortgage contract, what is the remaining time, mortgage amount, interest rates then and now. So that's a bit more variables. But let's say baseline €5,000, and then it depends on your situation if there's anything more than that. And there was a last piece of the question as well.
What do you mean about the costs?
Yeah, no, yeah. So there was the is it possible? Is it easy? What are the costs? And was there anything else?
1 year.
Oh yeah, very good. You can do it whenever you want. But the only thing to keep in mind is that different cities and municipalities have rules on when you can rent out your house. So the largest cities now require you to live in the property for at least 4 years if you're under a certain purchase price. If you're over the purchase price, you can do whatever you want, whenever you want. So that also, again, depends kind of where you buy. From the bank's perspective, you can do whatever you want, whenever you want that.
Okay, thank you. Another question is, if you have a house rented in the Netherlands, even if you benefit from 30% ruling, you have to pay taxes of box 3 if you get rent from a house. Is this information not correct? Someone is just
well, yeah, it's funny how to answer that question. What you say is, well, let me answer it correctly. If you have a 30% ruling, you don't pay asset tax. So no box 3 tax. So that means indeed you don't pay taxes over the rental income. So you don't, at that point, also don't pay taxes over the property that you own as an investment mortgage. So yeah, if you have an investment property, you don't pay taxes over that in box 3.
So another 2 questions, I would say I'm going to combine in one. So is it true that income tax rule might change? And the second part will be, what are the implications of the ongoing changes to the box 3 tax and rental income?
Yeah, so it's not expected that anytime soon the income tax will change when it comes to the rental income. We don't know. They're forming a cabinet right now, so we have to wait and see what those plans are. But knowing the judicial system and the tax for the law forming process in the Netherlands, I don't expect that to happen overnight. So we don't expect any changes anytime soon. When it comes to the changes for the tax implications in box 3 for your property, it kind of depends on what kind of changes you expect to be that you imply here. But when it comes to your personal finances, this is something that we can calculate in detail what that means for you. So then we can see if it makes sense to do this investment and how that can benefit you. From the larger scale of things, there might be that there's current investors that have a certain portfolio in real estate, and they want to rebalance their portfolio, right? One of the goals that you might have for an investment. So it could be that one of the results would be that there's more properties on the market that are currently rented out that you can then invest in because other investors want to adjust their portfolio. So that could be that there's more investment properties coming on the market soon, but we have to wait and see if that will be the implication there.
Another question is related with the newly builds. When do you start paying the mortgage for a newly built?
Very good question. Right away. Basically, you confirm to the project developer, yes, I want to buy or have this property built for me. And then from that point on, we secure your mortgage, and that's when you start paying your mortgage also. Now, you don't start paying the full mortgage right away. That gradually builds up. Because basically, let's say you buy a house of 500,000 euros new build, then basically that whole 500,000 euros or the amount of mortgage that you take out will be put in a so-called building deposit. And from that building deposit, you gradually start paying the construction of the property. And for every step that you pay a bit more out of this building deposit, your mortgage payment increases. So it starts about, let's say, 40% of the total mortgage amount. And then every payment that you do out of this building deposit, your monthly payment increases by, let's say, 10% approximately. So that's it gradually builds up until the development is done. So the property is delivered, and then you pay the full amount of the mortgage.
Another question is related with Property Protection Act, which I share also resources, which municipality have which boss value. And the question is related that I thought most municipalities don't allow buy-to-let new builds unless you guarantee to live in 2 or 4 years.
That kind of depends on what the project is indeed. So this is particular for properties and some municipalities too. So it's good to be well aware of that. And if you want to invest in real estate, make sure that you know, or if it's a real estate new builds, if it's that combination, be sure that you, before you commit to something, that you know what the fine print is there, and if they do allow you to rent out or sell the property within the next 3-4 years. So it's not necessarily the case for every property and every new build project, but it does happen. So make sure that you're well aware of that. It kind of makes sense in a way, because when you move into a new build, the project developer wants to be sure that people moving in there are moving in all together, and it's not rented out all of it. So it depends on the project. Be sure that you know what you're committing to.
We just need to clarify that.
Sure.
So property transfer tax on home seems to be 2%, not over 10%. So
let me explain how it works. The transfer tax. When you buy a property for your own usage, so for your residential purpose, then it's 2% regularly. There's even some exemptions there, but it's 2%. When you use the property for in any other way than for your own residency, then automatically your transfer tax will be 10.4%. This is one of the rulings that and that's indeed, I see that right now, the overdrachtsbelasting in Dutch, the property transfer tax. So this applies when you use the property not for your own residency. Automatically, the property transfer tax is 10.4%. This is one of the rulings that the government has put in place to give homeowners that are relatively new on the market a better shot. And that's basically what's going on there. So 10.4 if you don't use the property for yourself, 0% if it's a new build.
Thank you. If you rent out a room in your property, do you need to declare this? If so, who do you need to declare this information to? Will the government and tax authorities need proof that you are the primary residence, or what they will ask for?
So when it comes to the government and showing that you're the primary resident, you do that by being registered in the property. So that's not necessarily the case when you rent out one room. What is good to keep in mind is that the tenant in your house has rights at some point as well. So be sure that you know what's going on there. So if you want to, because if you don't and you just let it go, and you want to sell the house after 2 years, for instance, and you then say, okay, sure, to your tenant that rents a room, you say, well, hey, it's been fun the last 2 years, but I'm selling my house. So you have to find something else. By law, they have tenant rights, so they're not obligated to move out of the house. So then you have to sell your house with this person in there. So if you rent out one room, make sure that you set up the contract correctly and, for instance, include an eviction clause where you say, okay, sure, when I want to sell my house, I give you 3 months time, for instance, to find another place, and you could even consider give them first right of bidding. That you say, okay, you have the first option to put in an offer. I'll consider that, and if I don't like it, you can go for another buyer. But that's it. If you have somebody in your house, make sure that you can sell the house and they are not staying in there. That's the primary thing. You don't have to declare that to the government necessarily, but be sure, check in with a tax advisor, and we can check it as well. How much rental income you get from renting out a room. Because over a certain amount per year, your income tax when you rent out a room is there. So you do pay income tax over part of the rental income when you rent out a room. Not when it's the entire house, only a room. That has to be declared if you go over that amount. Otherwise, that's nothing to worry about. You don't even necessarily have to check in with the bank as long as you've taken care of your administration correctly.
And can you elaborate a little bit more about new point system that might limit the maximum rent?
Yeah. So you have a point system when it comes to social housing or rent control, however you want to call it, and commercial housing. Commercial housing basically is that you buy a property and you can rent it out to anybody for any amount. Social housing, that's when there's a control on the rental prices. There's a point system for the square meters. For instance, you get a certain amount of point for the finish of the house. So is it a well taken care of kitchen, bathroom, etc.? Are there tiles there? How is the house finished? Energy label, all of that makes a difference. Now, this year, as of the 1st of January 2024, the point system has increased the limit of points. So right now that is on 186 points. You have when you're under 186, you're automatically in social housing. If you go over 186, then automatically you're in commercial housing. So you don't have a cap when it comes to the rental income that you can charge. Social housing, I think top of my head, if you're under the 187, then the cap is 1,029 euros, top of my head. So then you cannot charge more than that. And then automatically you have to consider if it still makes sense to rent out the house. So it's good to keep it in mind if that point system applies on the property that you are buying. Square meters, energy rating, finish of the house. Your real estate agent can check that for you too.
Mm-hmm. A short one. Is there a transfer tax for keep to let?
Very good. It's a common question. Let me explain a bit about just if you see the term transfer tax. That's the best way to keep it in mind. It's about the transfer of ownership. So you pay transfer tax when the property ownership transfers from one person to the other. If you have a property and you have a mortgage on it, and you refinance that to an investment mortgage, so you can rent out the house, you'll still be the homeowner. So there's no transfer of ownership. So when you, with a keep to let, you have a mortgage, you change it into investment mortgage so you can rent it out, you move to a new house, but you're still owner, so no transfer tax. Keep to let, no transfer tax. Buy to let, there is transfer tax.
Okay, thank you. So we have some of the very personal questions. So I think the best would be because the best would be to schedule a pre-call and ask it.
Yeah. I presume it's personal questions about the people themselves, and not personal questions about me.
Yeah. Yes. So one of them is: are retired couples are at disadvantage in keep to let market? The plan is to downsize and earn income from the rental of the current home.
Yeah, you can.
What do you suggest for the people who would like to downsize and close to retirement age?
Yeah. Yeah, you can definitely. I mean, then you already that addition that you had, for instance, when you're close to retirement age, and you consider, well, you lived in a property for a couple of years, and you consider downsizing, or maybe to go to a property without stairs or something, whatever you want to do. or less maintenance of the property, then sure, you can definitely consider keeping the current property, because as you lived in the property for a couple of years, presumably, you might have repaid a bit of the mortgage already. So then you can probably quite easily adjust it to an investment mortgage, and then you have another source of income, passive source of income, to add to your retirement income, for instance. So can definitely make sense, for sure. Again, it's a cliche maybe a bit, but it's so dependent on your personal situation. But strictly speaking, yes, it makes sense. But we can look into what that really means for you, if it makes sense within your goals, when we know more about your finances. And again, as Egle indeed correctly mentioned, just schedule a short call with us, and then we can check if that makes sense. Strictly speaking, sure.
Another question for keep to let and moving abroad.
Yeah.
So Simona would like to keep to let her property, but she's planning to move abroad, but she will have a foreign income.
Yeah.
Does she meet eligibility criteria, and is it possible?
Under certain conditions, yes, it is possible. Not all banks are very giddy about it, are very happy to do that, but there's a couple of banks that do allow you to keep the property, move abroad, and still have the property as an investment property. But at this time, the current situation is that the one requirement is that you stay within the EU. So then there are definitely possibilities. If you go outside of the EU at this time, banks don't do this yet. But the expectation is that last year they changed their conditions to that it's possible if you stay within the EU. So there's a fair expectation that over the next coming years, 2-3 years, they might expand that to when you move to countries like the UK or Canada, the US. Let's see what happens there, but we do expect that those conditions will expand more. So it depends on where you move to and what your current situation is.
Okay. Kim is asking, okay, keep to let. We own a property and we will be ending the 30% ruling this July. We will likely wish to change our mortgage, living in the property for the 4 years. Is the bank appraisal or the was value used?
Neither. It's not the bank appraisal, or because there's not really such a thing as a bank appraisal necessarily, and the WZ doesn't give sufficient information. If you want to change to an investment mortgage, so in this case keep to let, then for an investment mortgage you always need a valuation report that shows the value of the property in rented state, expected rental income, and the point system. So it has to be a valuation report including that. That is not included in a bank appraisal or the WZ. So it has to be a separate valuation report.
And it's also very important, I guess, to note that in buy-to-let you are not allowed to live yourself, because another question is also related to that. Can you buy-to-let and go live yourself in the future?
In the future, yes. So when you buy it now, you buy it as an investment mortgage, and then you want to rent it out now. And then in 3 years, you say, okay, sure, that's it. And now I want to change to, I want to live in the property myself. You can. Then obviously make sure that the tenant leaves, and then you can adjust your mortgage back to a residential mortgage. Because what Egle mentioned correctly, a buy-to-let mortgage is not designed to live in the property yourself. Then you would convert it to a residential mortgage. To be fair, that makes a lot more sense also because the interest rates for a residential mortgage are lower, and you have that benefit for sure. So yes, you can move into the buy-to-let property later on. No worries. Just make sure that your mortgage is adjusted back so you don't pay too much interest rate.
How the value of rented property is calculated? I think it's more real estate
The
agent.
value of a property, well, it's not just an easy one-two addition there, but it's basically a couple of the variables is what's the property like, what is the finish of the property, what is the expected selling price with or without a tenant in there, what is the expected rental income, and the point system, energy rating. All of it determines in the end what the value of the property is. This is what a valuator does, an appraiser does. So it's not just an easy equation. There's a lot of variables coming into play, and this is also why it makes sense to work with a real estate agent, because they are able to give you insight what the expected value will be. Usually, let's say, very, very basic expectation, and again, it's not an official equation or something, take about 90 to 85%, 85 to 90% of the property value, and you come close to the expected rental price. But again, that depends very much on the property itself.
Thank you. Do people use the keep-to-let mortgage for adult child rent from their parents?
Sure. Yeah, they do. That's an option for sure. You can keep the property that you have and then rent it out to your children. That's all good. Yeah. You can rent it out to anybody, also your children. Yeah, whether it's something that you already own and change to keep to let, or you buy it from the market and rent it out to your children right away. Both is perfectly fine.
Robin, can you help me with the Dutch word? It's a second. It's I've seen this. I think like.
Is it in the Q&A or in the chat?
It's in a chat actually. Sorry.
In the chat.
A lot of questions in Q&A. I was doing
yes.
only webinar chat, so
yeah,
maybe we can send. Yeah. It's in Q&A. It's from DI UK.
Yeah. The overdrachtsbelasting, you mean?
Yes.
Yeah. The question from DUI, and yeah. So let me just check where the question is, because it if it's combined own use and short-term rental. So as long as you use the property for your own for at least a year, the tax authorities are not really specific about this. It's what it's based on their own assessment, and they do this for a particular reason. So if you, strictly speaking, if you live in the house for 1 year at least, then your property transfer tax is 2%, because you are using it for your own purpose. Now, if you first use it for your own residency for about a year, and then you transfer it to an investment mortgage, the tax authorities might want to double check and see how they perceive that, and might back tax you there if they expect that your in-game was all along that you want to rent it out, but just want to not have to pay that 10.4%. Basically, if you buy the house for your own use and you live in it for a year and a half, and then you rent it out, if that's possible with the municipal rules, then the transfer tax is 2%. If it's a combination, as you mentioned, between own usage and short-term rental, it kind of depends on what the split of that ownership is. It could even be that the tax authorities say, okay, sure, you use it for your own residency for, let's say, 80%, and then you pay 2% over that, and for the remaining 20%, you do use it for a short-term renting, so then you pay 10.4% over that. So it's kind of a gray area where the tax authorities will very much look into what they see fit, and also very much depends on what you mean by short-term renting, because banks don't necessarily like that a lot when you put it on Airbnb, for instance. But it's a bit the tax authorities are not fully transparent in that, because they want to be able to assess the situation piece by piece. But this is basically what it is. If you buy a property for yourself, 2% transfer tax, and then if you every now and again have somebody checking into renting out a room, sure, especially after a year or a bit, that's no problem. But before that, the tax authorities will probably charge you the 10.4 over the amount of over the percentage of your property that you're renting out. So yeah, there we go.
I think it's the best to schedule a call and discuss the situation. I see more questions coming, and
I do understand the question there.
Yeah. Maybe. So there are some questions being answered, but I noticed there are some questions in Q&A as well. But then one of maybe last ones. Can you buy to let and share it with your friends, for example, 50-50 as an investment mortgage?
Yes, you can. There's no problem. You can even if you buy a house together with a friend, then it does mean that both of you will have to be on the mortgage contract as well. But banks are okay with you buying together with a friend, especially when it comes to investment mortgages. So yeah, definitely possible. I see a lot of them coming in. Did you select a couple more, Egle?
Yeah. So the recording for sure we will be sharing. For more personal questions, please schedule a call, and Robin or my other colleague can help you. You will also can expect to receive an email from us with some resources with the Property Purchase Protection Act, for example, what are the benefits to invest in buy-to-let newly built properties.
Yeah.
And I also saved questions, and what I will do, I will answer them. We will answer them with Robin, and then we can share them just on our website. You can read a little bit more about this. Maybe one more last questions. I can buy an investment property with my partner and having myself only as the party of the mortgage. So
yeah, so that's basically kind of what we just discussed. So if you buy a house together, then you both have to be on the mortgage contract. So that's the thing. Property alone, and you want to only be the one on the contract. That's perfectly fine. But if you buy together, you both have to be on the contract. I see there's a question about the opkoopbescherming, and this is the Purchase Protection Act in English. There is Egle has written a blog about it before, where you can see per municipality what the limit is right now. Basically, what the Purchase Protection Act means is depending on the city that you are going to buy in. So, for instance, in Amsterdam, just to give you an example, the amounts and the rules can vary per municipality. But basically, in Amsterdam, for instance, when you buy a property here, if the WZ value this year is lower than 641,000 euros, so if you buy this year and the WZ value is lower than 641, then you have to live in the property for at least 4 years. So you have to be registered in the property, live there, do everything for at least 4 years. And after those 4 years, you can start renting out the property. If you buy a property for more than 641,000 euros this year in Amsterdam, then you're free to do whatever you like with the property, considering the municipal rules. Then if it's an apartment, for instance, you have to check with the homeowners association if they allow that too. But yes, the municipality allows you to rent out the house. So do by all means check our website and the LinkedIn post that we shared, because there you can see per province and per city in that province what the limits are of those municipalities. And consider it's always about the WOZ values. Now, you can look up the WZ values online as well. There's a WZ calculator, so then you can see what it is. Now, mind you, the new WZ values will be published soon, and they will probably be higher than they were before. So that means that you have a bit more space there. So that's basically the Purchase Protection Act, the English word for the opkoopbescherming, the ruling that the government has put in place to kind of make it easier for new first-time homebuyers to buy a house. Be sure that you know what's going on there. But again, feel free to schedule a call about it, and we can explain anything else that you might want to know about this.
Yeah, okay. And I see someone was saying that the webinar wasn't relevant for properties below 600K. Yeah, it depends per city. And sometimes some people want to invest also, not only one.
Yeah, well, it depends on where you're buying. Indeed, I mean, if you Amsterdam is the top of has the highest limit, so that's the 641. If you want to buy, for instance, in Landsmeer, which is a town just up north of Amsterdam, there's no cap at this time. Same goes for Hilversum, for instance. At this time, you can buy a house and rent it out right away. In Utrecht, that cap is not 600,000 euros, but somewhere in the 400,000 euros. So then it's good to keep in mind what the rules and regulations are, and then find a location and a property that fits your finances. So that's why it's good to do analysis and research before you dive into a specific field. Yeah.
Is vapes considered as part of Amsterdam?
It's part of the Amsterdam municipality now. So yeah.
Can you, one of the last ones, can you go for keep to let with new property in one person's name rather than a couple?
Yeah, you can, as long as your income is sufficient to cover to tick the boxes of the eligibility. Yes, you can. When you then also keep in mind, if you own the property as a couple before and then you continue it as your own, do consider that there's a transfer tax, because basically you take half of the ownership of the other person. But we can discuss this in a call together, what that means for you. But strictly speaking, yes, you can, no problem. There's a rule that when you buy a house when you're married, that you both have to be are automatically owner, and you both have to be on the mortgage. This specifically for a property that that is your primary residency. So that's considered your family residency. So then your significant other has to be part of that. It also very much depends on what your marriage situation is. So are you marriage in community of goods, or did you have a prenuptial agreement? All of that. So that's the situation there.
Yep.
I see, Ibrahim, thank you for your message. You mentioned that you want to discuss this further, please. The topic of buying together and then buying out the other partner's ownership. No problem. I think the best option is to schedule a call on our website, and then we can discuss what your situation is and what your options are.
Because there was another one saying that they are planning to do keep to let within coming 5 years. So enable to schedule a call and discuss situation. So it's also possible.
Yeah, no worries, of course. Yeah, by all means, schedule a call. Again, as mentioned, the first call that we charge, that we schedule, is the 10-15 minute call. Now we always schedule a bit more time, so we have some time. So then we can discuss your situation. It's always free of any obligation or any charge. That 15-minute call, so that's all good. And then when you really want to dive into the calculations and be very specific about what the outline of your finances would be, that's what we do in the financial analysis in the next step. But feel free to schedule a call, and then I look forward to having a chat with you and discuss your personal situation there. All right. Thank you so much for all the questions, everybody. I very much enjoyed it. I like to hear all the different insights that everybody has. So that's very, very good. I see that Egle also shared in the chat the link to the blog about the Purchase Protection Act, where you can read more about it. Feel free to reach out to schedule a call, and later on also emails always can be checked in and answered to as soon as possible. Thank you so much for your time. I hope you enjoyed your sandwich or your lunch during this presentation. And let me give the word back to Karim.
Thank you all for joining. Thank you very much to our wonderful speakers, Egle and Robin. Definitely do check out Mr. Mortgage. I've put the link in the chat for everyone to have a look. Good luck with your investing. And I wish you all a wonderful day. I hope you had a nice sandwich or something nice and warm to eat, depending what you like to have for lunch. Yeah, and wishing you all a wonderful, healthy, happy 2024, and we'll definitely see you in the next webinar. Thanks again to all of you and to our wonderful speakers. Have a great, great, great rest of the day.
Yes, definitely. Thank you, everybody, and thank you for hosting again, Karim. Have a great day.
My pleasure.
Cheers.
Thank you. And we'll send out the recording right after. So, yeah. Ciao, guys.
See ya.
Bye-bye. See ya.